What is going on, YouTube? Mike here, and I'm finally, after about a year, I'm finally back with you for another new video, and this happens to be a tax update video. If you've been following my channel now for the past several years, I make a video like this one every single year to cover the newest tax laws that are going into effect, starting with 2025, and we'll also be covering some of the tax laws, the numbers for 2024 as well. I don't want to waste any more time, so let's go ahead and dive into the numbers. I'm going to go over this as quickly as possible. If you like the video, make sure you like it. If you dislike it, make sure you dislike it. Leave comments, questions down below, and let's get started. Let's start with the tax brackets. Now, most of us are somewhat familiar with this, but if you're brand new to taxes, welcome to the party, pal. The way it actually works is your income is not taxed all at one rate. Your income is taxed at a progressive rate. What does that mean? So if you're a single filer, if you're looking at the single file column, and I'm not going to read these numbers to you, but essentially your first about $12,000 in income is only taxed at 10%. Then as you make above that, so from about 12,000 up to, I'm rounding here, from 12,000 up to about 48,000, you're taxed at 12%. And then once you're over about 48,500, then you're entering the 22% range, and so on and so forth. So just remember, your taxes is like climbing a ladder. That's why they call it a progressive tax, because the more income you make, the more you are subject to higher tax rates. Now, these tax rates, they've been in effect since 2017 from the Tax Cuts and Jobs Act. These rates were set to change starting after 2025 when the Tax Cuts and Jobs Act sunsets. But since Donald Trump is going to be back in office, I'll be surprised if they change these rates. So these rates were supposed to go back up about 3% on average because they used to be higher. Like the 12% used to actually be 15%, and the 37% bracket used to be 40% bracket. With where the economy's at right now, this is just my personal opinion, I don't foresee rates going back up another 3%. It would just hurt so many people. People are struggling financially already. I just don't see that happening, but we'll just have to wait and see on that. But at least for 2025, you're going to have these lower rates for at least one more year. Moving on to capital gains now. Now, believe it or not, your capital gains are also like a ladder. So if you're in the 12% bracket or lower, as whether you're a single filer, head of household, or married filing jointly, and you have capital gains, then you're virtually paying zero tax. Yes, I said zero on capital gains. So it could be long-term, and by capital gains, it's either long-term gains on sales of ETFs, stock sales, all that good stuff, or qualified dividends. So as a married couple, as an example, you can actually make, in 2025, you can make up to $96,700 in income. If you made it all in qualified dividends, or at least most of it, then you would virtually pay zero tax on about $100,000 in income. It's pretty cool. So those are the capital gain rates. I'm not going to go over that further, but remember, like most people pay gains at either some sort of proportion at either 0 or 15. It's usually not all or nothing. Usually it could be where you pay some at 0 and some at 15%. It just depends on where your overall income is at during that tax year. Moving on to the standard deduction. Yes, the standard deduction just keeps going up, folks, which is not a bad thing because that means more write-offs. So, and that's without you doing anything different. It's automatically given to you every single year. So the standard deduction in 2025 for single filers and married filing separate is going to go to $15,000, and then for if you're a joint filer, it's going up to $30,000. This is why most people just do not itemize their taxes anymore. The only exception I see with that is if somebody donates a very significant amount to charity, or if they have a very high mortgage interest, then that's the exception to the rule. But 90% plus of my clients no longer itemize just because the standard deduction just keeps going up so much. Oh, and remember, and if you are elderly or blind, I did not have this on the previous spreadsheet for the previous year, but thanks to your feedback, I added this. Then you get an additional boost. So if you're elderly or blind, you get an extra $2,000, and then if you're both elderly and blind, you get another $4,000. And then on the married filing joint column, the amounts listed there are per person. So if there's more than one individual, you get a bigger boost. Medical deductions, really nothing's changed there. The only thing I'll say is that you really don't get a benefit from medical deductions until the total amount exceeds 7.5% of your income, whatever that happens to be that year, and you have to be able to itemize. Now, If you don't think you can itemize, should you even track it? Well, the answer is you still should track it, because even if you can't itemize on the federal return, if you have a state income tax return, or if you live in a state that has state income taxes, you might be able to benefit from it on that return. There's several clients I met with this year that they were never tracking these things like donations and whatnot, just because they thought they couldn't itemize. Come to find out, once they actually added everything up, I said, you're going to have a benefit on your state return. And so I was able to save them, in this instance, an extra $300 to $400. And I was able to show people how that works. And so they were very pleased with the results of that. Let's talk about the child tax credit. Here we go. So as long as they're under 17, you can get up to $2,000 per child. Once they're over 17, then you can still claim them as like an other non-child dependent. So that's up to $500. But remember, only the child tax credit is refundable. So in 2025, the refundable portion of that credit is $1,700. Things that haven't changed is still the SALT limit, which stands for state and local income taxes. You can only deduct up to $10,000 in property taxes, state income taxes. We'll see if that changes starting in 2026. It might. If that's going to change, that's when I think it's going to happen. And then on mortgage interest deductions, as long as your mortgage debt is under $750,000 in most cases, you're fine. I mean, you can deduct the full amount of interest you pay. If you have mortgage debt exceeding, and this is just like personal debt, I'm not talking about rental properties, but personal mortgage debt that exceeds $750,000, then you get a limited interest deduction. So it's things to keep in mind. But other than that, there's really no changes to these categories. You still cannot be on and reimbursed employee expenses are still non-deductible. They might be deductible on your state return, but on the federal return, they're not. These could be things like job travel, union dues, education that you pay for out of pocket for your job, things like that. Legal fees are generally not deductible. Tax preparation fees are deductible, but on the state return. And then investment fees and for a safety deposit box and stuff are usually only deductible on your state income tax return and not currently deductible on your federal income tax return. Education related deductions like student loan interest, the income thresholds have gone up a little bit, so you can, if you're single filer, as long as your income is under $95,000, you can deduct your student loan interest. And if you're married filing jointly, that's about $195,000. So there's phase out ranges. You don't lose all of it right away, but the more income you make above those amounts or near those amounts, you might have a limited deduction on that. Then the American Opportunity Credit, which is still the best education credit there is, you can get up to $2,500 per year for 4 years of your undergraduate degree. And then the max refund on that is $1,000. But your income has to be like $90,000 roughly if you're single, or around $185,000 or less if you're married filing jointly. Just give or take. That number might be slightly off on that, but that's the general range, just to be aware of that. And then the lifetime learning credit is still up to $2,000 tax credit. The lifetime learning credit, as long as your income is under the income threshold, you can take it however many years you have, the qualified education expenses, which is cool. So like that's for a master's degree and things like that. Whereas the American Opportunity Credit is more so for your bachelor degree in that category. And in 401k plans have gone up. The contributions have increased just slightly. So in 2023, the contribution limit was 23 grand. Now it's going to be 23,500. Nothing major here, and that's if you're 49 years of age or younger. If you're 50 and up, then you can do the additional catch-up contribution, which is an additional $7,500. So some of my clients who are in the age range who are trying to beef up their retirement accounts, they're contributing, if they're able to, $31,000. And you can do $31,000 in 2025. For your IRAs and your Roth IRAs, which are your personal retirement accounts, so the limits on that have not changed. You're still stuck at about $7,000 if you're under 40, if you're under 50, and then if you're 50 and up, you can do up to $8,000. Social Security, your cost of living adjustment in 2024 is 3.2%, and 2025 is a measly 2.5%. And we won't. I'm sure a lot of people are feeling the burn on that one, but it is what it is. 2.5% is what you get on that one. Alimony rules are still the same. I'm not going to read this. This has been the same for many, many years since 2019. Your annual gift tax exclusion. So I get this question a lot. How much can you give somebody without paying taxes? Well, I mean, you can give people quite a bit of money. You're never going to have to worry about paying gift tax. The thing you have to actually think about is like you'll have to file a gift tax return. So if you give somebody, an individual, more than in 2024 it's 18,000, but in 2025 it's going up to 19,000. So if you give your brother, 20 grand, in a single year, then you're going to have to file a gift tax return because you gave your brother more than what the exclusion amount is. But if you give them $19,000 exactly or less, then there's no gift tax return filing. Now, if you file a gift tax return, or if you're required to because you give somebody a big cash gift, we're seeing this a lot right now in this economy with parents helping their kids buy homes. That's how most younger people are getting homes right now, is through help from their parents. Very few people make $200,000, even $200,000 a year right now is not a lot anymore, even depending upon where you live. So, and most people aren't making $300,000 or $400,000, I can tell you that. But so we see a lot of gifting going on just from people's parents to help their kids get a home. And so those parents are having to file gift tax returns. This next section I'm going to skip over a little bit. It deals with the federal estate tax exclusion. Virtually nobody's going to pay estate tax with the current laws. I mean, you have to have if you're single, you have to have a net worth of about 14 million or more. Or if you're married filing jointly, you'd have to have over 27 million in assets. This is not for the average Joe, folks. This is for the ultra rich. You don't have to worry about that. Alternative minimum tax rules. So there is still some AMT that comes into play if you make a certain amount of income. I'm not going to cover this. Most people, I work with about 300 clients personally right now. And, maybe out of the 300, I think less than 5 pay any sort of AMT tax. Not going to go over that right now. Let's keep on going. Let's go down the spreadsheet here. Oh, let's talk about the flex spending account. So for the taxable years beginning in 2025, the dollar limitation for employee salary reductions for contributions to health flexible spending arrangement rises to $3,300, increasing from $3,200. So there's an extra $100 you can contribute to that for your medical reason or for your health account savings. For cafeteria plans that permits the carryover of unused amounts, the maximum carryover amount is now $660 versus $640. Such small increments. They should really allow those plans to carry over more, in my opinion. But for the health savings account, which is my favorite health savings type of vehicle, if you're single, you can contribute as long as you qualify for the health savings plan, which means you have to have a high deductible health insurance plan. That's the main leading factor. There's no income limits on this stuff, folks, so it's one of the best things you can do if you can have access to it as an HSA. $4,300 is what you can put away in 2020, starting in 2025, and then in 2025 for a family plan, you can contribute up to $8,550. And basically, it's a no-brainer. If you know you're going to have medical expenses, whether it's now or in the future, if you have the money, it absolutely makes sense, in my opinion, to throw money at this because you're going to instantly pay less taxes and you're going to have money built up for like an emergency fund for your medical savings. It's a win-win all the way around. It's one of the best things out there. I wish I could have access to that. I currently can't, but when I used to, I used to have a Fidelity account with an HSA, and you can actually invest in the stock market with your health savings accounts. And some platforms allow that, some don't, but very, very cool vehicle to utilize. Let's keep on going for the adoption credits on the screen. These are what the amounts are for. It's about $17,000 in 2025. It used to be about $16,800 in 2024. So small increases there. Here's the phase out limits for the earned income credit. Remember, to get the earned income credit, you have to have a pretty low income. Most of the clients I work with are not able to get it. A few are, maybe like less than 5 though. It's very rare that I see this, but it's a great tax credit if you can get it. So there's the earned income credit. This says, I forgot to update this. This says 2022. It's meant to say 2025. So in the spreadsheet, guys, there's I try to update this every year. I'm very limited on time, so there could be some small little inconsistencies in here, but for the most part, the numbers should be pretty accurate. Like I said, it's not perfect. I don't expect it to be perfect, but it should be close to perfect in terms of what these amounts are. And let's keep on going. Remember, if you have a business and you have a net operating loss, you can deduct up to 80% of that loss during the current year, and the rest of it's going to carry forward. And the standard mileage rate, for business miles, so in 2024, it's 67 cents per mile. Make sure you track your miles. It's worth a lot of money for you if you do. And then for 2025, that's going to go up to 70 cents per mile. And those are the people who can use them, either file a Schedule C, Schedule E, or Schedule F for, if you're involved in any of those activities. The QBI deduction, this is a big one. This may or may not go away starting in 2026. We don't know yet. But for the QBI deduction, if you're a single filer or head of household, as long as you make under $191,000, then you can use it. QBI deduction is basically if you it's a free deduction basically. So if you, let's say you have 100 grand in business income, net business income from your business, you can instantly get a 20% deduction automatically on that. So you're automatically going to get a $20,000 write-off if your income is under a certain amount. So it saves you a lot of money in taxes. 20 grand, a $20,000 savings is probably going to save you, net savings is probably going to save you about 5 grand in taxes. So it's pretty substantial. So that deduction, we'll see if it goes away. I sure hope it doesn't, because when this first came out back in like 2017, 2018, there was a lot of learning to do on this. So I'm hoping they don't take this away. We'll see. And remember, if you are in a manufacturing type of business, then you can actually, even if you're above those income thresholds, you can pay out wages to help you boost that amount of the QBI deduction for you. I'm not going to go over that in this video. It's too complicated, but let's keep on going. Remember, there are tax penalties. So if you don't pay your taxes, if on time, then there's your failure to file penalty is the worst though. It's 4.5% per month on the balance due of whatever you're supposed to owe. And then failure to pay penalties, 0.5% per month. And it's up to a max of 25% of the balance on each of those. So it gets pretty hefty. And I think I'm going to wrap this up here. I need to add into this, I forgot to add the filing table, the minimum filing threshold. So I'll go ahead and do that before I upload the spreadsheet. But make sure I'll make this available to download via Dropbox. I'll put a link in the video description. And thanks so much, guys. I hope you enjoyed this video, and I appreciate all the years you've watched this content. And I'm sorry for the lack of content. I've been, running an accounting firm, and it's kept me so busy I can't be doing YouTube. I always say, like, the real accountants are not on YouTube. The real accountants are crunching the numbers, and I'm one of those guys. So until eventually, if I have more staff, more help, then I'll hopefully get to be able to publish more videos. But for now, I'm not a YouTuber. I'm an accountant. I'm an actual CPA. That's what I do for a living. And so I'll publish as many videos as I can, but I do appreciate all the support over the years. I've had the pleasure of working with so many good people now through YouTube. I think about maybe 10-20% of my business comes just from YouTubers, people watching my content, and even my older content. And now I work with some really good people because of this channel, and I am so blessed for it. So thank you so much, everybody. I hope you have a wonderful 2025, and I will see you all in the next video. Peace.